Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 262 today. And we're going to show you how the sectors are performing relative to each other and how to identify sectoral momentum and see which sectors are doing well and which ones are not. First, a look at the market. So, market opened with a gap up and just kept going one way, a kind of a move that we have not seen in a while. So, maybe we've seen the bottom for this quarter or for this month at least, and we're going to see higher levels. So the next sort of resistance point will come around I think the 16,200 levels, which we had achieved in early June. So 16,700 levels are the sort of major resistance, but now we are crossing the 16,270 to 80 levels, which we had dropped down from about a week back. So it's very good to see that a pivotal resistance is getting broken and on good volumes. The sectors which were falling so far, like IT, are leading this run up. So this is all quite positive in my view, and this has come on the back of very good, nice global cues, with US and Nasdaq also gaining ground, IT stocks gaining ground. So there seems to be a renewed optimism that what has been baked into the market in terms of the rate hikes will actually play the way it has been discounted, and there will be no further surprises. So 27th July, I think, is the next Fed hike, and people are already expecting, I think there's 82% expectancy of 1% hike. So if we get 75 basis points now, that will be a positive surprise, and maybe there is some commentary about the next few rises. So it does seem that for now the market has taken all this inflation in its stride and decided that enough is enough and we are moving forward or ahead or upwards at least. So IT stocks gaining the most, plus 3%. PSU banks almost 3% up. Metal stocks also, which were reeling down, 2.5% up. Private banking also up 2.3%. Commodities up 1.6%. Public sector enterprise, infrastructure stocks, energy stocks, you name it. Some defensive sectors, FMCG and pharma, were muted today, and auto stocks that had been running past many sessions was also a bit muted today. Autos, consumption. So all the sectors that had been robust in the last 1 month, you can see here 14%, were taking a breather, whereas sectors that had not been doing so well in the last week or so have taken lead. So there is always a kind of a rotation that is happening in sectors, and I'll talk about this more towards the end of this daily bite. But a very good session. Some confidence and a continuity of the upward trend coming back. So with this positive note, let's look at the broader indices. So all the indices were up between 1.3 to 1.4.5%, 1.46%. So a very nice broad-based up day. In the weekend investing universe also, we saw strategies up 2.3% on MI20 to 2% on NNF10, 1.5% on several of them, and strategies which had high cash have obviously gained less, but nevertheless a reasonably good positive update. And as you can see in the Heatmap also, Infosys up 4%, TCS, HCL Tech, Wipro up almost 2% each, Tech Mahindra up 3.5%. So IT was leading, and FMCG had muted day. Consumption stocks like Titan, auto stocks like Tata Motors, Bajaj Auto doing well, Bharti Airtel doing well, steel stocks, Ultra Semco, cement stocks, Tata Steel, JSW Steel also doing well, energy stocks, ONGC, Coal India also doing well, L&T, Asian Paints also doing well. And then of course in the banking we had Kotak Bank, State Bank, ICICI Bank and Axis Bank also doing well, and some finance companies also doing well. So overall a very good day. In terms of the maximum gainers in the top 500 universe, Vardhman Textiles up 14%, Star Health up 10%, Poonawalla up 7%, Varroc Engineer up 7%, Easy Trip also up 7%. And there were some minor losers. Laurus Labs, Zydus, FDC, KEC International, and CEAT. Minor losers, 2 to 3% kind of losers. So now let's come to the sectoral momentum. So we have this chart that we track. We have all these the sectors that I had shown you earlier, and also including Nifty 500 index, Nifty index, Bank Nifty, gold, some of these, and some sectors. So it's all a mixed bag sort of, and we've ranked them as per the rate of change over 1 month, 3 months, 6 months, 9 months, and 12 months. So what is the index today versus 1 month before? That is the rate of change. What is the percentage change over 1 month, and rank it based on 1 month. Similarly, compare today's index versus 3 months back, rank it. Today's index minus 6 months back, rank it this way. So you have these 5 columns and rankings. And what you can see very, very clearly, that autos over the last 12 months, 9 months, 6 months, 3 months and 1 month have been leading. It has been in the top 2 ranks. FMCG top 3 ranks all throughout. Consumption stocks top 5 ranks. So you can just see by the color gradation that some sectors have remained strong, in the last 12 months leading up to even now, whereas some sectors have taken a backseat versus 12 months, versus 9 months, versus 6 months. So IT stocks, metal stocks, commodity stocks are probably in the worst momentum right now. Auto stocks, FMCG and consumption are in the best momentum category. And of course, this can change. This can change over time. And there are some which were not so doing so well versus 12 months, like financial services, but are now improving. Pharma, which was versus 12 months very poor, but now improving. And then there are reverse ones. Energy, which was doing very well over the last 9 months comparison, now at 12 or 13. Similarly, public sector enterprise, similarly, media stocks. So you can, of course, there is no one sort of reading that you can derive out of it. It will have to depend upon how you want to read it. So you can, also sort it based on this and have your own sort of reading out of it. And I'll provide this chart in the description below so you can play around with this. So what you can see is that, if you were to look at purely, let's say, on a 1 year basis, then energy, autos, FMCG, consumptions, this is the ranking as of now. Even though energy may have dropped to 12 ranking right now over a 1 month period, but over a 12-month period, it is still doing very well. Whereas over a 12-month period, metals, IT, pharma, financial services, banks, they are the worst performing right now. So for long-term momentum strategies, you want to avoid these sectors and sort of be here. For shorter term momentum strategies, you want to be here. Autos, FMCG, consumption, financial service. Again, similar sort of a batch. Whereas metals, commodities, IT remain universally sort of the weakest amongst them. But it can gradually change, and that will depend upon the design of your watching the momentum, whether you're watching 12-month momentum, 3 months, 6 months, 9 months, combination of these, so on and so forth. So this is just a sort of a tool that I wanted to introduce to you so that you can create your own strategies also out of this and play around this to get inferences from here. So what we've done here in this chart is plotted Nifty versus the top 3 strategies, so top 3 sectors. So CNX Auto, CNX FMCG and CNX Consumption stocks. And you can see that from November 21 till about you can say June mid, they were pretty much in unison, but somewhere in the last month and a half, there has been a sort of a relative divergence, wherein Nifty is going up, but this is going up much, much faster. So, the rate of change on the autos and FMCG or consumption is very high. And you can also see versus a year back, while Nifty went into the red somewhat here, they never went into the red. They always stayed green here, minus the FMCG and the autos in the initial part. So a lot can be said about the sort of breaking out sort of this chart, and you can see that within no time they will be at all times high, whereas Nifty will not touch all time highs till about reaching here, whereas these sectors are very near all time. So if they do a breakout, then maybe there is much more to go on the higher side. So in our strategies also, we are seeing that there is a gradual churn in the last many months to FMCG, to consumption stocks, to auto stocks, and so this is how the automatic rotation of sectors happens, where we have moved out of metals, we've moved out of IT some time back, and depending upon how sectors move, we may come back in. So this is just a very small primer on how sectoral momentum works and how you can use it to gauge the the flow, where the market is going, where is the new leadership, and how you would wish to play this market and the sectors. So this is all I had for today's daily bite. Thank you so much for watching. Please do subscribe to the channel if you have not so far, and please do keep liking the channel if you like the content, and of course you need to share it with your loved one, otherwise you're doing a disservice to them. Thank you so much, and see you again soon. Bye.